Partnership Realtors. Good to be back with you guys again here. And we are going to be going over some very important part of our life, which is knowing how to pre-qualify our customers and knowing if their capabilities on what they can buy and how much they can buy. Today's going to be a really interesting class. But before we begin in that, I want to start talking about what we're going to do tomorrow. So tomorrow is also another very interesting class. We're going to be going over this governor's shutdown, on what we're able to do as realtors, title company, mortgage lenders, and so forth. We have to keep our social distance. And also we're going to be going over all the Florida Realtors guidelines on social distance, on how to show properties, on how to continue just doing our course of transaction during the following weeks and months. And also we were going to go over the addendums, the COVID-19 addendum. Every single offer that you put in there and it converts into a contract, that coronavirus addendum, which is on your form Simplicity. If you guys go into your MLS, then you go into your form Simplicity, then you go to form packages, the addendum is going to be there. It has to be part of every deal. Why? Because if we have to get an extension for the closing date, for the loan commitment, for the appraisal, for the insurance, there are many different reasons why. So we're going to be going over this tomorrow and how we can continue doing closings. Right now, it's a phenomenal period in our life where realtors are helping clients being able to purchase properties that, honestly, about a month ago, a month and a half ago, 2 months ago, they were not able to come near a property like this here. We closed on a property yesterday where the family bought a house, a 3-bedroom, 2-bath, with the in-ground pool screened in, and the total sales price was $219,000, and the entire payment, including taxes, insurance, and everything, was like $13 and some change. You couldn't even rent a 1-bedroom apartment for that there. Rentals were way high. So right now, it's a great opportunity for clients, our clients, that you should be talking about this through your social media. Our clients should be taking advantage of this here, because you guys know very well that once this coronavirus scenario just kind of dies down a little bit, which it will really soon, and everything just comes back into order again. Our interest rates are going to go right back up again. Our property values are going to go back up again. And people aren't going to get this opportunity to buy a single family home at a very affordable price and a very affordable monthly payment. Okay? People that are purchasing properties, I seen them a month and a half ago, were having to buy a townhouse, a villa, a condo, because they truly, the payments were just not the right payments in their budget to afford a single family home. This is the time they should be buying. And one of the great things about this here, I know, and we're going to be going over the financing in a moment, and one of the great things about it is our government, HUD, is still, Fannie Mae, Freddie Mac, Ginnie Mae, they're still doing very strong. They're holding very strong. They're giving us great interest rate, the great programs, which we're going to go over some of the details in a moment. And they're just giving us phenomenal tools to work with to help a lot of individuals having that home ownership, and having a very affordable payment at a very affordable price. And this is something that you guys should be marketing, talking about, because it is amazing. We are closing quite a bit of transactions. I mean, a lot. We're closing a lot. Our realtors are closing a lot, but they're doing exactly what I've always been telling you guys to. Take this time that you're at home with this government shutdown and do nothing but marketing. Market all of the Partnership Realty's properties. Put them into your Facebook. Talk about the savings and the interest rates. The rates are so low right now, from 3 all the way to 4%. Okay, And it's amazing what the payments are and what the prices are. And this is going to go up again. So talk about that because it's something, an opportunity that, it comes once in a while. And I understand it's a very difficult time for us, but we have to look at the positive side of this year. The government's helping us in very many different ways. So again, tomorrow we're even going to talk about the stimulus package. We're going to talk about the SBA loans that are available. We're going to talk about grants that are available that are all coming around. And we're going to talk about our responsibility as a realtor, as a professional, what we can do, what we can't do, and the addendums. But today we're going to go over some of the bullet points here. The only actual loans that are happening right now are non-QM loans, which are our self-employed non-QM loans. Self-employed loans aren't really taking place that much, okay? They're not closed down. These lenders haven't shut down. They're just, right now, they're on standby. They're on standby watching. The rates are really low, so that kind of doesn't make a lot of sense for them, because these rates are always been a bit higher, and we'll go over that in a little bit. But again, once this market just stabilizes a little bit, all this is going to come right back again. These lenders are just waiting, and so we don't have any non-QMs. They haven't gone out of business. They're just on standby. What's that for? For self-employed, bank statement loans, accountants, certified CPA accountants letters, and things like that. The loans that we have right now are W-2s. What's the W-2? W-2 is an individual, when they get a pay stub every week or every 2 weeks, they take out what's called Social Security, Medicaid, FICA. There's discounts in their pay stubs, okay? That's a W-2 employee. Basically, those are the ones that are really getting the loans right now. And the governments are doing phenomenal loans with them. So we've got the conventional loans, we got the VA loans, we got the FHA loans, and we've got bond money. We have a lot of lenders that are going to be coming live with you guys starting next week. They're going to be going over all of their loan programs. And even though every single lender has the same government loans, their lending criteria is completely different. Some will not go below a 620. And what happens if you've got a client that has a 596? You're not going to lose that client. You're going to need to know what lender to go to, because that client and FHA will allow as low as 585. So you guys need to know which lender is which. Here at Partnership Realty, we work with 22 different mortgage lenders. Why so many? Because they're all different. Every single one of them is different, and so are your clients. Every time a client walks in the door, they are uniquely different. They might have a debt-to-income ratio. They might have a length of job issue. They might have a credit score issue. They might have a funds to close issue. So we need to know which lender would be the right lender. One of the good things is that we could always, introduce them to 3-4 lenders and tell them, here's 4, 5, 6 lenders. Speak to them, talk to them, and see which one that you feel most comfortable with about helping you with your lending institution. One of the great things about our government loans and FHA loans, that our interest rates are low right now. And there is no difference between 600 scores and 800 scores. So if you get a client in with a 605, 620, 680, 640, they're going to get the same interest rate as an 800 score. Okay, so we've got a lot of phenomenal things. I know I did a class prior to this, and we were going over contracts. I was asking that when you guys write up a contract, ask for 60-day closings, and 45-day loan commitments. Well, things have changed from that day to today's date, okay? I've been talking to all of our lenders, and they are still lending strongly, very strongly, okay? Some of them will require a 45-day closing and with a 30-day loan commitment period. That's pretty good. You can always put on or before on that one there. But then we have other lenders that are telling me, Ishmael, we're fine. We're fine with 30-day closings, and we're fine with a 21-day loan commitment. How strong is that in today's market with what's going on? So again, you want to be tuned in to these lenders when they come out. We're going to give some notices of who's going to be coming and what they're going to be talking about. But you want to meet these lenders. Well, you're not going to meet them personally, but you're going to meet them online. They're open. They're active. You can call them. You can send them things through email to get pre-approved. The majority of them have got these online applications that you just apply right online, upload the documents, the client sends it right over to them, and we get a pre-approval within a very short period of time. But one thing very important that I want to talk about, there's a lot of important things I want to talk about, but something that you need to tell your clients, please. Before, we were having verifications of employments within about 10 days right before the closing date, okay? Right now, because there's so much irregularity in the jobs and the employment, lenders are doing 2 days VOE. What's a VOE? A verification of employment. So please tell your clients or client to not switch jobs while they're under contract. Why? Because if they do, it could probably cost them their loan. And it's going to put them in not such a nice scenario if we get a denial letter a couple of days right before closing, because they're past their loan commitment period, they're past their due diligence. It's just not worth it. So do please advise them that do not change jobs, okay? If they do change their job, it's for the better, not for the worse. And time is of the essence as well, too. They can't be changing jobs within 2 to 3 days a week prior, because if we have a closing date because a seller is selling this property to buy another property and that seller's buying another property and it's just a dominoes effect, you have a lot of people counting on this closing happening on per that contract date on or before. So we don't want any surprises coming up. So if there's going to be any change of employment, it needs to be done way nowhere near 2 weeks before or 3 weeks before. Let the lender know it. But I would think on a 30-day closing that 3 weeks prior to, I mean, you would need to notify your mortgage lender and let them know this. But we can't wait till the last moment, what I call the 11th hour, okay? A good thing about FHA loans right now on properties that are owner-occupied or tenants, if the owners or the tenants don't want to allow an appraiser to come into the home, it's quite all right, because they're doing what's called drive-bys, okay? These aren't drive-bys that you would typically think. I think I could have used a better expression for that. These drive-bys are just appraisers going by, taking photos. They've done all their research at homes. I like that about drive-bys. They've done their research at their office, at their home office. They've already determined the value. They're just going to go over there and take outside photos of the home. Now, that's only if the owner or the tenants do not allow the appraiser to come in, to go inside. But if the property is vacant, if it's a new construction, development or anything like that, then a full appraisal is completely required, okay? Another great thing, IRS is waiving temporarily, is waiving the 4506Ts. What is a 4506T? It's a verification of their taxes. When the clients come in to be pre-approved, they're going to hand in their tax returns. And the lender has to reach out to IRS to make sure they match. IRS sometimes will get these tax returns back on a very timely manner, okay? And sometimes because of delays during the tax period and so forth, the IRS will, just can't get to responding back to so many millions and millions and millions and millions of people. So it gets delayed a little bit, and then that delays our closing date as well, too. So the 4506Ts are just temporarily waived by the IRS. So there's a lot of great things that our government is doing to help us, to really assist us getting through these rough patches of water that we're going through, But one of the very important things here today is that you guys have to know how to pre-qualify a client, okay? I don't want you guys to become mortgage brokers, mortgage lenders, or anything like that. You don't want to. But you guys are very responsible for that, for the client's transaction from the beginning of this transaction to the very end, okay? And you need to know. One of the stories I love the most, I was at one of my local lenders here. I mean, they're nationwide, but I was at the local branch. And I asked this mortgage lender, how many loans did they get in one day? Now, we're talking nationwide. So he goes, you know, Ishmael, let me take a look. He punches in the computer. He goes, we got 4,700 loans in one day. That's a lot of loans, okay? That's in one day. So what happens if they lose 50%, 60%, 70%? That's a lot of loans that they're still going to close on. You guys don't have 4,700 transactions. You guys don't even have 47 or something like that. You might have 4. You might have 1. You can't lose that one transaction. So we work with 22 different lenders. Why? Because all of our lenders are completely different, okay, and unique. Same programs, it's just their lending criteria is different. So depending on our client, we want to make sure that they're with the right lender. Now, how do we find out if they're with the right lender or not? Client will walk in and they're going to have a pre-approval letter. What is our job as a realtor at that point once we get that pre-approval letter? Well, we're going to take the pre-approval letter, get a copy of it. We'll look at the bottom. The lending company is going to be there. The loan officer's name is going to be there, and all their contact information. So we're going to call them up, and we're going to introduce ourselves, and we're going to tell them we have a client, in common, and we want to thank them for the pre-approval letter. But I have a couple of questions to ask you, Mr. or Mrs. Loan Officer or Mortgage Broker. I want to find out, did this client or clients come in and bring in their complete financials, which is called, their tax returns or pay stubs. You're not breaking any financial privacy laws. You didn't ask where they work at. You did not ask how much money they made. All I asked was, and this is a question directly to the lender, did they bring in their financials, their tax returns, their pay stubs? If the lender says, nope, we're pending, waiting on them, then that pre-approval letter that you've got, it's got no value to it whatsoever, okay? So, but if they tell you, yes, they did, and the next question I'm going to ask them is, okay, based on what you've seen on those financials, are they okay? Do they qualify? Are they going to qualify for the loan program that you chose for them? And all I need is for them to say, yes, they sure do. Perfect, thank you. Question number 1. Question number 2, did you check their credit? Yes, we did. Perfect. And also, when you check their credit, does their credit qualify for the loan program that you chose for them? Yes, it does. Check mark number 2. Boy, things are going along really well so far. Now the last question is, have you looked at their bank statements? Okay? And based on those bank statements, do the bank statements qualify for the loan program that you chose for them? And all I need them to say at this point, him or her, to say at this point, yep, sure do. Another check mark. We've got a pretty good pre-approval letter in our hand. That's something that we have to do as realtors. You guys just can't take a pre-approval letter and go, looks good to me, come on, let's go. You can't do that. A lot of people depend on you, okay? The actual buyers depend on you to some point. The listing agent does, the seller does, the title company, so many parties involved. And if that seller's buying a property from another property to another seller and another seller, look how many people are depending on you to do your job correctly. So this is something that we must do at all times, okay? Now, one very important thing is, how do we pre-approve someone? How do we pre-approve someone? Well, we're certainly not going to pull their credit. Guaranteed we're not. And we're certainly not going to ask for their tax returns. Nope, we're not either. And I don't want to see their pay stubs. Really don't. How about their bank statements? Don't want to see that one either. All I want to do is ask them a couple of questions, okay? And we're going to go into that in a minute. But here is what you guys should know. To be a successful realtor, and again, this is my opinion in the last 22 years that I've been managing partnership realty, okay? It hasn't changed. It really, truly hasn't changed in my book, okay? But again, this is just my opinion. Everyone practices their own real estate, conducts their own real estate in different ways. This is just my opinion. For you to be a very successful realtor in the state of Florida or in any state that you're licensed at, 50% of your success is going to come from knowing the financial world, knowing the loan programs, whether it's for foreign national, self-employed, private lenders, for anyone whatsoever, you need to be able to know and help them. And you need to ask the right questions. But why? Because we are responsible for their transaction and their escrow deposit money from the beginning of this transaction all the way to the very end. So we want to have an idea about the monthly payment. Can they afford it or not? We want to know that at the time of closing, I understand that every single loan, that when it gets originated, everything starts out with a good faith estimate. It says it right there, good faith estimate, GFE. Since the lenders don't really, the buyers don't have a property yet, they don't know the taxes, they don't know insurance, it's only a good faith estimate. But the down payment should also be very close. No one likes a surprise that someone's looking at possibly just coming into this property with maybe, say, $11,000, $8,000, $9,000 down. I'm gonna use $8,000. With $8,000 down, and at the time of closing, that they get a surprise. Oh, by the way, you need to bring funds to close of $12,800. That's a big difference. I understand they're good faith estimates only, but I mean, it could be off, over or under $300, $400, $500, $600, $700, something like that. You know, because we don't know about the HOAs, we don't know about any assessments. There's a lot of factors. We don't know about the insurance, how much the insurance is going to come in over or under. There's a lot of factors involved. But when we do our jobs correctly, we know what we're doing, we try to minimize the unforeseen, uncomfortable scenarios. And that's our job. Our job is to do what at Partnership Realty? Is to make this transaction the most pleasant transaction for our buyers and sellers, co-workers as possible. And how do we do that? Education, complete education. Right now, we're taking the time and you guys are being educated right from your home, coming in to see all these classes that we're promoting you guys. Here's something. The classes are being seen are being transmitted through FaceTime, and they're also through YouTube. So when you're in, it was not Facebook, I meant to say, I apologize. Through Facebook, hit like, please. Why? Because when new classes come out, you're going to be notified. So you're going to be notified by Facebook of all these classes that are coming out, and you're going to be able to view them and see them from your home. Also, when you go to YouTube, put under and sign up as a subscriber. Again, why? Because YouTube is going to be notifying you of all the upcoming classes that are going on and taking place. So hit subscriber under YouTube and hit like under Facebook. But again, going back to being a successful realtor, 50% of your success, it's my opinion only, comes from understanding the financial world. And I don't want you to go get a mortgage broker's license right away. Don't do that. Specialize in one field or another. You know, I recommend real estate. You already got the real estate license. It's a phenomenal career. Stick with that. Let the mortgage lenders do their job, but you guys have to have an idea of what's going on. You can't be clueless of the transaction because a lot of people are depending on you. 25% of your success, you're at 75% now. 25% of your success, I just want you to be you. I want you to be a professional. I want you to have and answer all your calls. And it doesn't mean you have to answer your phone right away, okay? I mean, you could be in an appointment, you can be in a meeting, you could be in a showing, you could be doing anything, but do answer your phone within 24 hours or less. Because the first thing the clients are going to think is, oh, geez, you know, I've left Ishmael quite a few messages. He hasn't called me back. I don't think he's interested. Let's go with someone else. Don't do that. You're a professional. Make sure you call him back as soon as you get your first open free moment, 7 days a week. That's what makes us very professional, okay? Always professional mannerism at all time. Knowing your market. You've got to know your market, your farming area. We've done classes on this, some of our previous classes. You can go and see them on either one of the Facebook or YouTube. And that's extremely important. You have to know your farming area like better than the back of your hand. You've got to know what's going on in your area of expertise, okay? So you're at 75% of your success. Now, to get to 100% of your success, what's the other 25%? Contracts and forms. We are going to be going over all of them, okay? Now, there'll probably be like a basic class on contracts. Then you're going to get a more advanced class. You know, all of this stuff, it's just like today's class. It's impossible to make you guys understand the financial world unless you've been in the banking business, or I'm sorry, in the mortgage lending business. If you just got your license the other day, it's literally impossible for you guys to know the ins and outs of the mortgage lending business in just a matter of an hour or a couple of hours or 5 hours. Because some classes that we do, when we do them here in the office, would take 5 or 6 hours, and still you guys weren't ready. Or you weren't ready. It takes numerous classes, and it's just like a loan officer. A loan officer just gets their license the other day. Kind of scary. I like seasoned lenders because they know what they're doing. They've been doing it for a long time, and so forth. Hewlett-Packard 12C calculator. This is a calculator that all the lending institutions and myself personally that I use to calculate principal and interest. And it's pretty simple. And again, everything that I do is just an estimate, but I like to have an idea of where the clients qualify at and what they can buy, okay? So the Hewlett-Packard 12C calculator, we can even do a class on that. And you guys can Google it and see it. This is a financial calculator. It's a phenomenal calculator. They're sort of costly, but they last forever. You might have to change the battery once in a while, but boy, do these calculators last. They're phenomenal. This is something there. What is it that you need to know when you're going to pre-qualify someone? Well, there's only 3 things. When I go to talk to a client, I want to find out 3 things. I want to find out a little bit about their credit. I want to find out about their employment. And I want to find out funds to close. You know, those are the 3 simple questions that I'm going to ask. And this is the questions that you guys should be asking. So really simple. When the person comes in, if it's an individual or if there's 2 or more or 1 person, I want to find out about their credit score. Usually people will tell you right up front immediately, I got a 680, 690, 700, 800. One of the funny things I like is when I ask someone and they go, well, I really don't know. Everyone knows their credit. To me, that's a red flag. I'm going to be very honest with you. That's nothing more than a red flag when someone says to me, okay, I really don't know. Okay, it's a red flag. They've got a pretty low credit score. Okay, so what next question I'll ask them is, do you have a 425? Oh, it's a little higher than that. So you need to know which lender to put who with, okay, the clients with, you know. So I want to find out, first of all, the credit. I don't want to pull their credit. Just want to ask them, what's your credit score? If they tell me 660, check mark on number 1. I'm going to ask them about their employment. How long have you been at your job? I'm not asking where you're working at, just how long have you been at your job? Well, I've been there 3 years. FHA conventional loans require 24 months, 2 years, okay? So if they tell me I've been there for over 2 years, I've been there for 3, 5, 6, 7 years, I'm already starting, I've got the pen in my hand already almost to put a check mark on the employment. Because I want to find out how much they're making too, in gross, okay? Number 3, sir, ma'am, how much money do you have for the purchase of your home? Because I, as a realtor, have to help you to make sure when you close on this property that you are closing with this property with exactly what you discussed. And if you discuss with your mortgage lender that you have $8,000, we need to keep you in that vicinity. We need to keep you in that ballpark. Okay? So it's very important to know. Now let me ask you a question. What if someone says, well, how much do you need? You know, that to me again is another red flag. So what am I going to ask them? Do you at least have $1,500? $1,000? No, we've got more than that. Great. So we're going to try to work with what you've got. And we're going to find out what lenders got the bond money. We had so many programs prior to this happening, this COVID-19. We have so many programs available that clients were buying properties with only $1,500 out of pocket. $1,000 for escrow and $500 for the appraisal. Amazing. Amazing. We had 100% financing, 102%. They're still there. They're just in standby. They're just in standby. So the three types of lending sources that there are is our government loans, our Fannie Mae, Freddie Mac, Ginnie Mae loans, which are conventional loans, FHAs, VAs, HomePath, and our bond money loans. Those are really the only ones that are taking place right now. Like number two are portfolio lenders, our non-QM loans, which is number two. There are bank statements, there are accountant CPA letters. They're on standby. So we're not going to talk about number two, but we will talk about number three. Those still exist. Those are hard equity lenders. These are people that have very bad credit. They probably have a very irregular job. They're probably a tradesman where they don't really, deposit any money into their accounts, or I don't know what the case may be. But these loans right there, we're starting anywhere from about 6.5% all the way up to 15%. And I understand that 15% sounds rather high. The majority of people think that interest rates are a bad thing. They're not. They're a great thing because you have home ownership. You have home ownership, okay? Interest rates, they feel that it's money just thrown out the window. So is rent, So I would prefer to pay a 15% interest rate than a 1,700% interest rate or a 2,000% interest rate, because that's a rent payment. A rent payment of $1,700, $2,000, you're throwing money out the window. By the way, the landlord loves you. Why? Because you're paying their mortgage for them. You really can't put in repairs. If you put in repairs, they're going to love you even more. So I prefer to have a 15% interest rate, okay? And I own the property. I can rent out the property if I wanted to, and I can sell the property a day down the road and walk away with a profit, okay? Where I can probably fix whatever issues I might have, whether it's credit, whether it's employment. I can probably get those sorted, and then I don't have to go into a private lender anymore, and I can go into a government loan. So there's a lot of positive things, but today we're going to talk about HUD. We're going to talk about our government loans. Again, the portfolio loans were tradesmen, people that own their own business, truck drivers, just anyone that's self-employed, but we're not going into those. Just wanted to show you what they are. Okay, private lenders are for, anyone that really has some type of, ITIN numbers, that they, foreign nationals, that they, someone bad credit and so forth. Well, we won't go into deep details with those, but just wanted you to know what they are. Government loans. Okay, FHA allows all the way down, as low as 585 score. That's pretty darn good, okay? But here's the thing. When you talk to a loan officer and the loan officer says to you, well, we don't allow less than a 620, that's really a criteria from their lending institution. It doesn't mean your client cannot buy a home. So we need to know which lenders are which. And again, one of the great things is by next week, a lot of our lenders are going to be here live. They're going to be speaking with you guys. You guys are going to be able to watch this through YouTube, and you're going to see it on Facebook. And they're going to be going over all of their loan programs, how helpful they are to you and your clients. So if someone comes to you and says, I have a 595, well, we need to know which lender we can work with, okay? Because FHA does allow it. 2 years on the job. Sometimes people will switch in 2 years employment 4 times, We want to find out whether there is a gap in their employment. And a lot of lenders won't allow over a 2-month gap. Others will allow a 4-month gap or greater. So we need to know who that lender is with the 4-month gap. But what if the client says, well, nope, I went straight from one job to the other. Perfect, check mark on that, okay? And again, funds to close. So we have the FHA loans, and we also have what's called, these are manual underwrites, alternative lines of credit. We're not going to go over those. FHA does allow alternative lines of credit. We're not going to go into those today because that's on standby as well too. In another class, we're going to go over it, and this will be coming right back very soon as well too. But today, sorry, we're going to go back. I accidentally skipped. Let me go back. Okay, today we're going to go over the 586. FHA will do as low as a 580 score and greater. The clients must have at least 3 trade lines for over 12 months. Something that we should know. Okay, it could be a Visa, MasterCard, car loan, furniture, anything like that. Again, here are the 3 questions: credit, employment, W-2. And by the way, there are a lot of individuals who are self-employed that will qualify for the government loans, okay, for the FHA or conventional loans. Why? You let the lenders make that determining factor. You're just going to ask the question. So when you call up the lender, you're going to let them know up front, listen, I've got a client, they've been on their job for 7 years, they are self-employed, you know, they've got $20,000 to put down. You're going to have a lot of information to provide to the lending institution, you know, and let them do the pre-qualification properly. We just want to know a little bit of what's going on. So let's talk about credit. One of the things I ask our clients all the time is, since I don't pull their credit, and never do I want to pull their credit, I don't have the means of how to pull their credit, but what do? I ask them a few questions. Okay? I want to see what value of a home they qualify for, and more or less the mortgage payment. So what am I going to ask the individual or individuals? I'm going to ask them about their credit. First of all, I'm going to ask of the credit score. So jot that down. I got their credit score, 640 and a 680. Check mark on number 1. Okay? Now I'm going to ask them, do they have a car loan? Nope, the car loan's paid off. Nice. Okay? I wish I was you, I would say that, you know. But if they do have a car loan, I'm going to ask them who it's with and what's the car loan, 380, 1,380, whatever it may be, 780. You're going to jot it down. You're going to ask them, do they have student loans? Even though these student loans are deferred, it doesn't matter. It has to be counted against them. Okay? So I'm going to ask them, how much do they owe in student loans? All these are just approximately. Okay? So if it says approximately I owe like $10,000, what can you use? You can use anywhere from $50 to $60 to $100. It's up to you on the monthly payment. In this case here, I use $60. You know, if you want to use $100, it's a lot more comfortable. I prefer to be higher than lower. In this case here, I just don't even know why I put $15,000 down, but that should be about $100 per month. Okay? Next one is I want to know about their credit cards. Credit cards that have open balances, not that have zero balances. Those I don't want to talk about. So I want to go over the credit cards that have open balances. So I'm going to ask them to go ahead and just tell me all about their credit cards. This particular person has 4. The first one's a Visa and it has a balance of $600. I want to know what the minimum monthly payment is, not what they send per month. I don't want to know if they send $150. I want to know what the minimum monthly payment is. So if they tell me it's $25, I'm going to jot it down. So tell me about your second one. Well, I've got a Discover card. And sir, ma'am, what do you owe on that one? $1,100. And what is your minimum payment? $50. Great. Tell me about the third one. Well, I have a Home Depot card. What do you owe on that one? I owe $700. And what's the minimum payment? $50. And the next one, I have a Sears card. I owe $300 and the minimum payment is $25. Okay? You also have to ask them if they are making any child support payments, okay, as well. That has to be included. But in this case here, we only have this, and that totals up to $590 of revolving credit. This is what's on their credit report. And look at this. We have not yet pulled their credit. Okay, we're just working based on what they're telling us. So $590 in revolving credit. That is called the front end. When you guys went to class and you took your local exam and state exam, they asked you what the ratios were on a conventional loan or an FHA loan, front end and back end. Well, when you talk to a lender, you talk to anyone, you want to sound like you know what you're doing. So your front end is $590. That's the ratios. That's how much you owe. It's $590. So you take the $590 divided by their income, and it's going to give you their front end ratio. So I'm just using some examples here. The front end being a 31 for FHA 41. Truly it's not. Truly it's not. It's actually front end is 45.99, and back end is 46.99. No, I think it's front end is 44.99 and back end is 46.99. I'm not a mortgage broker. I just need to know a little bit about what I'm doing. Okay, so we're going to see it in a minute, so we'll be able to determine it. So the back end will be the housing. What is the housing? Will be the principal and interest, taxes, insurance, and mortgage insurance. The PITI. Okay. Employment, we want to go into employment. We want to ask if they're a W-2 or if they're a 1099. And we want to ask them how much they make gross per year. In this case here, you know, they gave us gross $49,000. So you're going to divide that by 12. That gives us $4,083. Okay? So the monthly income is $4,083 gross. Now, if we divide that by 2, which is $2,041.50, that's 50%. That's 50%. That is over our back-end ratio of 36%, but at 50%, you know, and again, our FHAs were 46.99, front end, back end 56.99. I gave it to you guys a little bit wrong a few minutes ago. So it's 56.99. Third question is, you know, how much money do they have for the purchase of their home? And if they tell us it's $8,000, we want to keep them around that vicinity. We want to make sure the lender recognizes that. We don't want them coming in to a surprise at the time of closing that they have to come up with $11,000, $12,000. Boy, you know, someone did their job wrong there. And I would have to say it's from the lender side all the way to the realtor. Because the realtor needs to be on top of all this and asking questions to the lenders at all time. Did the insurance come in? Did this change their principal and interest, taxes, and insurance? Their PITI, the taxes. We need to know all of this. The interest rate, did it change? Did you lock it in? These are questions you want to ask. So funds to close would be the third one. And when you go, it's just not the $8,000. When you go to write a contract, a buyer goes to buy a home, there are 5 out-of-pocket expenses. You've got the down payment for an FHA is 3.5%. Conventionals have right now 3%, 5%. They got phenomenal conventional programs at 3% and 5%. But FHA is 3.5%. But you have closing costs. They'll allow up to 6% closing costs, which could be a seller contribution, or the clients can bring the money themselves. But truly, just for a rule of thumb, you guys should work with 4%. 4% is a good rule of thumb. Just to have an average idea, the lender in their good faith estimate is going to really tell you exactly what the closing costs are going to come out to. But we need to have an idea, and everything that we're doing here is just having an idea. That's all it is. We don't want to be loan officers. We don't want to be mortgage brokers. It's hard enough staying on top of the ball and making sure that everything goes smoothly as a realtor. Can you imagine? No, I'm fine with a career as a realtor. I tip off my hat to loan officers. They work very hard. They work extremely hard. You know, I tip my hat off to them because they're on top of everything. They have just as much pressure as we do. So also, you have to have insurance. The property must be insured. Appraisal fee. Appraisal fee range anywhere from $450 all the way to $550, depending on the lender. And you also have home inspections, but there's also 4-point and wind mitigations. Now, a lot of these inspection companies, if you do everything at one time, they only have to go visit the property one time. They'll give you a discount if they do it all at the same time. So they'll do the home inspection and they'll do the 4-point and wind mitigation at the same time. So here on funds to close, again, down payment, closing costs, 4%. Again, this is just an idea of ours, a rule of thumb for us to work with. The lender's going to let us know. Homeowners insurance and appraisal fees. We're really not going to go into this right here. I want to go into the gross monthly income, which is $4,083 divided by 2, which is 50%. Remember, I said FHA allows up to 56.99%. So we're below it. We just need to be in the ballpark. We don't need to be on the pitcher's mound. We don't need to be at the batting plate. Okay, we just need to be in the ballpark. Let the lender do their job, but you need to know what's going on. So here, if we take the $2,041.50, which is their monthly, which is divided right here, their monthly income divided by 2, now we take out their revolving credit, it's going to give us a $1,451 housing payment. And what is a housing payment? It's going to be the property taxes, homeowners insurance, mortgage insurance, we'll go over in a little bit, and principal and interest. So let's start here. PITI is principal, interest, taxes, and insurance. Okay. Interest rate, you see that I've got there at 4.5%. Obviously, this was PowerPoint was made, designed a couple of months ago. Interest rates have dropped enormously. Great time right now for our buyers to buy a property. Okay. So we need to calculate in there the principal and interest, property taxes, homeowners insurance, and so forth. We're not going to go much into that, but I just want to give you like a breakdown, because everything that a lender does, you guys can pretty much do it as well too. If you've got a finance calculator, your MLS has a mortgage calculator built into it, okay, on any listings. Our website has a finance calculator built into it. If you go to www.takehome100.com, there's a mortgage calculator in there. You don't have to go buy a Hewlett-Packard 12C calculator. It's just plug in the numbers. Have an idea of where the interest rates are at. Say right now 3.75, 4%, 3.5%. You know, if we think that they're financing, let's say $220,000, we're going to use 3.5% down. So we're going to have the difference at, let's say, 3.75. It's going to give us our principal and interest. Everything's an estimate anyway. So we're just giving them a ballpark because we need to know the ballpark. They need to know the ballpark as well too. So final steps here is knowing and figuring out what the principal and interest are, what the taxes are. We haven't picked out a property yet, but us as realtors, we have that MLS report. It'll tell you what the taxes are. Sometimes us, the realtor, will help the loan officer and help the clients qualify for a much greater property that they couldn't have qualified before because their debt to income ratios were too tight. So we have MLS. This is how important it is. I see realtors all the time that they go through all the hard work for going to school, DBPR, Division of Real Estate, and getting their license by DBPR, and then they don't want to get the MLS report. I'm sorry, their MLS and sign up with NAR, with our board, a local board. That's crazy, you know, because your tools are there to make a lot of money with that MLS. Have access to it. The finance calculator is there. The taxes are there. Well, let's talk about someone that comes in. I'll tell you the last scenario I had. We were selling a property and the seller would not come down less than $435,000. Okay, would not come less than that. And I was getting an offer on that property of, I think it was like $385,000. Seller won't come down. The buyers told me very bluntly, Ishmael, we want this property, but we don't qualify for it. Well, let me do something. I'm going to talk to your lender and ask them a couple of questions. What were the questions? One, what taxes did you use? Number two, what insurance did you use? Great. Thank you very much, lender. I went back to the seller and said, well, I already knew what the taxes are because I went to property appraiser's office and saw it. Okay. So that lender was using like almost $8,000 in taxes, and this property was homesteaded at $4,500 in taxes. The insurance, the lender was using like $5,000, and on this property here, it was like $3,300 per year. Okay, look at this. Now that I gave these accurate numbers to the lenders, guess what? These individuals shot up to almost over $500,000. So now they were able to qualify for this $435,000 home, which they were okay with that sales price, and so was the seller. So here, myself as a realtor, you as a realtor, you just put a deal together by knowing these simple facts. The MLS report will tell you if the insurance if the taxes are less, and if they're greater, then it's going to change their debt to income ratios. But if it's less, it's going to help them qualify for a more expensive home, or the payment's going to be reduced down. It's going to be a lesser payment. So it's a win-win all around, okay? So in this case here, we used a scenario where the revolving credit is 590 divided by their gross income, gave them a front end of 14%. And again, the total here gave them a back end of 51%. They truly qualify. And this is something, again, that, we're not going to pull credit. We don't want to see their tax returns. We don't want to see their bank statements. We don't want to see their pay stubs. We just want to know what's going on, because we need to know. We need to have very intelligent answers back to our clients when they're calling up that their lender, they've reached out to them a bunch of times and not been able to reach them. You yourself want to know what's going on. Listing agent wants to know what's going on. Seller wants to know what's going on, and you've got to give good answers back. This is a basic, very, very basic class in financing, but we're going to do many more. And plus, there'll be many more lenders here to assist you guys with and be more knowledgeable in your real estate career. So again, we're not going to go in mortgage insurance, but we will go into it another day on sort of how to calculate it, but not today. So we're going to go to the next page. We do want to know what mortgage insurance is. MI, PMI, okay? I can't tell you how many clients have actually come into my office, or our office, better said, okay, and said, well, we got a pre-approval. We know what the payment is, but we don't know what this MI means. You guys should know as well, too, and should be able to answer their question. What is mortgage insurance? That's an insurance required by FHA and conventional as well, too, but required by FHA. If they're only putting the minimum down, mortgage insurance is mandatory. And that's an insurance that protects the lender. It's only designed for the lender, because they're doing a high-risk loan where, they're financing almost the entire thing. You're only putting 3.5% down. So this insurance is there for the lender, solely for the lender, in case something bad was to happen, a default or something like that. But it doesn't cover the property if there's a fire, if there's a hurricane or anything like that. It's only an insurance for the lender. And on FHA, it's a mandatory. On conventional loans, it's definitely depending on how much money you're putting down. Tomorrow, I do want to go over again with you guys. So we're going to be going over, again, our social distance. We're going to go over the COVID-19. We're going to be going over our governor's orders on the lockdowns of what we can do, what we can't do. How can we help, bring our society back and help others? We're going to be going over the COVID-19 addendums, our responsibilities and things like that as realtors, how we should be doing any showings, and we're going to be going over everything. So I hope to see you guys tomorrow, and everyone have a lovely afternoon.